Okay, we can start. And hello, everyone, and welcome to the premiere of the Big Whales Market Call. This is a monthly format, so each month we will host the sharpest minds in the digital asset industry. My name is Aleksandar. I'm a research analyst at the Big Whale, your host, and I regularly produce research on Bitcoin and the convergence between traditional finance and digital asset realm. Joining me today are Raphaël Bloch, co-founder and editor-in-chief at the Big Whale from Paris, Andrei Dragosh, head of research at Bitwise Europe, one of the largest ETF and ETP providers from Frankfurt, Germany, and Joseph Shalom, co-CEO of Sharplink, or just CEO, the second largest Ethereum treasury company by Ethereum stacked from New York City. Welcome to the show, gentlemen. You can submit your questions in the comment section. 5 minutes at the end will be dedicated towards answering them. A quick word about the Big Whale. We are independent, fully B2B, and leading digital asset research platform in Europe. Of course, if you want to learn more, visit our website. The agenda for today's episode is packed with alpha. First, we'll dig into Bitwise's latest report, Liquidity to Ledger. Then we'll host a conversation on which treasury model is more compelling right now. Is it Bitcoin treasuries or Ethereum treasuries? And finally, we'll wrap up with the forward-looking view, the key risks to watch over the next 3 to 12 months. We'll keep answers very concise, gentlemen, like 2 minutes max per answer, so we can cover as many angles as possible. If I interrupt you during the conversation, yeah, don't take it personally. So it's just business. So, and yeah, before we get started, I want to thank our sponsor, Bitwise. Now let's dive in. So last week, we just saw a bloodbath in the latest US job numbers, especially the sharp revision to June's NFP print. But what's surprising is that risk on assets actually rallied in the aftermath, and I have to say gold rallied as well, which is ridiculous. The burning question remains: will Jerome Powell save us in the September? Maybe Andrei can help us answer that with his latest report. So, Andrei, the report offers very valuable insights on Bitcoin and the market in general, and particularly the macro segment, which I liked a lot. There are many factors to consider, of course, and arguably the most important macro event of the year is only 7 days away, which is, of course, we all hope that it's going to be a Fed rate cut. Could you explain us which metrics / macro indicators are most influential in determining the Fed's interest rate decision?
Yes, sure. And thank you again for the invitation. Good afternoon, everyone. So you mentioned our latest macro report, which is a regular publication about Bitcoin and crypto assets and macro, the most important macro themes and topics, right? And so, as you mentioned, the last one was called Liquidity to Ledger, Mapping Bitcoin's Path in an Easy Money Era. And of course, it focused on this very question, like, will we see rate cuts? What will be the effect of Bitcoin, of these rate cuts on Bitcoin and crypto assets, and so on? And our general view on the Fed is it remains behind the curve. So if you look at the standard Taylor rule, for instance, based on unemployment, the unemployment rate and core inflation, it already implies that the Fed funds target rate should be around 50 basis points lower. And the case becomes even stronger if you look at forward-looking indicators like the one on the left-hand side for the unemployment rate. So consumer surveys in the US actually imply that the unemployment rate will continue to trend higher, right, over the coming months. So it will actually strengthen the case. And if you look at at these variables that the Fed's actually watching, like the labor market and inflation, what you can observe essentially since 2022 is that both labor market and inflation surprises, data surprises in the US have continued to surprise to the downside, right? And they've been very negative lately. There's only been a brief uptick because of this producer price inflation print, which was a positive upside surprise, right? But like the general case remains that both labor market and inflation data surprises are very negative. They're as negative as during COVID, right?
Okay.
And so there's actually, and what you can see here on the right-hand side is they tend to correlate very well with Fed funds futures expectations, right, about rate cuts and rate hikes. And
So we can
so there's
say
still a
that,
gap. So it implies that
yeah.
there will be some, I think there's still some downside potential in Fed rate cut expectations. And we're just seeing that Fed rate cuts expectations are adapting to these worse data, right?
Okay, so we can align that poly market is actually good on pricing in almost the 100% certainty of the Fed rate cut in September. Yeah, very good. Of course, when I write research papers for the big whales, such as quarterly reports and state of Bitcoin, I emphasize the importance of macro and how much the macro is in driver's seat when it comes to digital assets, of course, and other risk on assets. So we align there that I think also the Fed rate decision will be very colossal and will have a colossal effect in September. But don't you think that other events could bring us headwinds, like we've seen the political instability all around the world and also debt crisis in Europe 2.0?
Yes, of course. I just want to point out why these rate cuts are important, because I hear these questions all the time. Why should we actually care about rate cuts by the Fed, right? Why should we care as crypto as investors, right? And the reason is the Fed tends to influence the short end of the yield curve, right? So by reducing short-term interest rates, what you usually get is a steepening of the yield curve. Usually it tends to steepen during rate cuts. And what it does is it tends to accelerate liquidity growth. And we know what's very bullish for Bitcoin and scarce crypto assets is higher liquidity growth, higher money supply growth. And this is what's happening. And we've already seen new all-time highs in US money supply. We've seen new all-time highs in global money supply. The Chinese money supply growth is re-accelerating. So all in all, taken together, there's a clear case. I mean, we're already at new all-time highs. You've probably seen this M2 money supply chart versus Bitcoin that already implies that the rally will continue, and Fed rate cuts will make this case even stronger, right?
Yeah.
Andre, what's your plan if we have a rates cut? It's 25 bips, 50 bips. What's your?
I think so many. I mean, obviously, the Fed funds target of the Fed funds futures priced in 100% probability for a 25 basis point cut, right? And even more, they've started pricing in 50 basis points to a certain extent, but only marginally. But I think if the Fed wants to surprise, it should go 50 basis points, right? And front load cuts, because there's no point in doing 25 basis points if it's priced in already, right? So many analysts have been calling for some kind of front loading in order to surprise the markets. But yeah, I think base case is 25 basis points, right?
Raf, I would like your perspective on uncertainties and political instability in France, since you're on the ground. Do you think that can stall the growth in risk on assets going into Q4?
Yes, it's a good question. So yeah, as you know, we just had yesterday a new prime minister, and yeah, the political situation is quite unstable in France. But I would say that this is not only the case in France; it's also the case in Europe. But it's still a political instability. It's not yet a financial instability. So I would say that first it's political, and then maybe it will be more a financial thing. And in this case, as you know, I mean, crypto and especially Bitcoin are, I mean, not really a safe haven, especially when you have a financial crisis because people want liquidity. So I will not bet that a financial crisis will be something good for crypto, especially in the short term, but maybe in the more long term, it could be interesting, but it's more a matter of years.
Yeah. Thank you for the perspective. So I want to expand on one thing. So let's imagine that we do have rate cuts and everything is very fertile ground for risk on assets. Andre, do you think that final rotation will happen back to Bitcoin this fall, or alts will continue to outperform?
So many factors at play, but I think what you've seen more recently, so if you take a big picture view of what's been happening to both Bitcoin and Ethereum, because you've essentially seen just a rotation from Bitcoin to Ethereum, not so much to other alts, right? Not so much
Mhm.
to Solana or like XRP or anything. But if you look at both of these crypto assets, what's been happening is from a sentiment perspective, you've seen this increase in cross-asset risk appetite globally, right? Not only crypto assets, but across assets. And usually, I believe in this kind of trickle-down effect, right? Where you have, okay, most of the capital tends to accrue to Bitcoin first, and then it moves to Ethereum, and then other major coins, and then these secondary tokens and so on, right? But what you've seen is Ethereum actually outperformed, right? Ethereum actually outperformed majorly because we've seen significantly higher flows, right? In terms of ETPs, we've seen these acquisitions by ETH treasury companies like Sharplink, right? And also Bitmine and others, right? So, and at the same time, so this is just from a flow perspective, and you can also see it not only in like ETP flows or like treasury company flows, you can see it on chain. There's been like an outperformance in terms of capital invested based on realized cap between Ethereum and Bitcoin. So you can also see this rotation on chain. But what's been happening from a big picture view is you had this big uncertainty around Ethereum's roadmap, which lasted until the Pectra upgrade, in my view, right? And then suddenly, after the Pectra upgrade, all of this kind of uncertainty went away, right? While at the
Yeah.
same time, if you look at like Bitcoin's roadmap, what happened to Bitcoin was you've seen this feud between like the core and the NOTS camp, right?
Yeah.
And so in terms of like, you can't call it roadmap, but it's essentially very similar, right? So what happened there, you've seen an increasing uncertainty around Bitcoin's roadmap, right? While the uncertainty around Ethereum's roadmap has actually declined. And
Yeah.
these marginal declines slash increases in uncertainty, I think, have contributed to this rotation as well, right? From a big picture view, right?
So very okay. So we have a much clearer roadmap for Ethereum in at least in 2025 than Bitcoin, and that dispute is really taking its toll on the network and kind of
Yes.
the perception of the asset. Joseph, sir, what is your opinion on that? Do you think that the chance for it exists in retaining capital flows that we have seen in Q3? I mean, that were like unprecedented capital flows into Ethereum.
I believe so, and I think we're at the beginning of a Ethereum, not just mindshare moment, but a macro cycle. And I'm not the kind of person who is a Bitcoin versus Ethereum maxi. I don't wake up every morning talking about flipping Bitcoin. I think if you look at the moments that matter, Circle's IPO, the Genius Act, regulatory clarity, I think it's going to have a massive impact on not only the expansion of stablecoins, but what their use cases are. And what I mean by that is I think we're at the first or second inning in American parlance of the tokenization of finance in the US. You know, I joined Sharplink as its CEO just 6 weeks ago after 20 years at BlackRock. And in the last years, not only launching Bitcoin and ETH ETP side by side with our colleagues at Bitwise, but starting the tokenization conversation in real institutional. And by institutional, I mean the largest money managers, the largest intermediaries in the world. And I think we're on the verge of seeing a potential explosion in the tokenization, not just of liquidity products like what we did at BlackRock, but of large ETFs, stocks, and funds. And if that's the case, you'll need more stablecoins, you'll have more velocity, and that will create a demand that hasn't existed for a decade. So you've had a little bit of stablecoin over the past decade. You've had some DeFi, but on the fringes of where real capital markets are. Imagine a world where you go from having $10 billion of tokenized treasuries as the upside to a world where some of the largest ETFs are tokenized. You're talking about potentially 10xing in a single fund being tokenized. So I think the demand is going to be there. I think it's going to be on Ethereum. So far, it's proven that's the pace. place for stablecoin liquidity and for real world assets. And I think we're at the beginning of a cycle after 10 years of Ethereum building.
Excellent. Now, let's talk a little bit more about Ethereum digital asset treasuries. What's the Wall Street's appetite for ETH DATs, and why are they appealing to investors? Okay.
Sure. If you talk about this as a trade or a short-term market movement, I think we are missing the point, and this could be a fad. At Sharplink, we are talking about a decade-long opportunity to essentially decentralize the financial system on a neutral, trusted network. And I don't underestimate the challenges to adoption, but I think the market is underestimating what that adoption will mean for the Ethereum ecosystem. You know, Bitcoin has been a great treasury asset. Michael Saylor has demonstrated you can drive outsized returns for investors. I think the more we do in educating capital markets on what the next generation will look like, the more interest there will be. Take a step back. In the last 3 months, there's been over $14 billion of capital flows into these treasury companies. And while we're having a bit of a pullback and a mean reversion right now, we think it's temporary. And I think it will be a decade-long opportunity, not a trade. And that's why we're in it for the long run.
Okay. When I think about Ethereum digital asset treasuries, I just picture MNAV, which is maybe a little bit short-sighted. But I want to get Andrei, your perspective on, are Bitcoin treasuries more solid? And by more solid, I mean return-generating investments, since their MNAVs are stickier, just in the general market perception.
It's a very delicate question, especially considering the fact that Joseph's here. But I try to be as diplomatic as possible, and this is just my personal opinion here. So, I mean, the question boils down to what kind of crypto asset is the better crypto asset, right? Is it Bitcoin? Is it Ethereum? But I think both assets are rather complementary, right? There are no substitutes, right? Bitcoin has a different use case, in my opinion, than Ethereum, right? Bitcoin is store value, and Ethereum is essentially a smart contract, an app store, if you will, right? And so I think both assets are complementary. If you look at treasury companies, Bitcoin treasury companies versus Ethereum treasury companies, what is more valuable? I mean, if you just look at market pricing based on MNAV, based on this kind of premium relative to treasury assets, right now, at least, Bitcoin treasury companies appear to be more valuable, right? Based on the MNAV. I think I've looked up some numbers. So if you look at, for instance, MSTR strategies, Michael Saylor strategy versus Bitmine, Tom Lee's Bitmine, I think MSTR is trading at a 1.3, 1.4-ish MNAV, while Bitmine's trading at 1.1, right? So there appears to be a higher premium despite this rotation we've seen, right, from Bitcoin to Ethereum. And if you take the top 10, excluding these outliers, like you have these big outliers like Coinbase that are essentially not a treasury company, right? But they do hold Bitcoin, they also hold Ethereum as treasury. And Yunfeng Financial, they have like a crazy MNAV. But if you exclude these outliers, then you get for the top 10 around 1.7 for Bitcoin treasury companies and 1.2 for Ethereum treasury companies. But yeah, as I've said, they're more or less complementary. They're not substitutes. I mean, there used to be this kind of narrative about Ethereum that is ultrasound money, which is true to a certain extent. If you look at the supply growth and so on, it tends to be deflationary at times through the burn rate and so on. But I think they don't compete in the same kind of spheres anymore. They used to compete, but not anymore, I'd say.
Can we say, yeah, go, Raph.
Yeah, no, just one question and one reaction. Would you say that those two types of so digital asset treasury companies are for different investors, or I mean, what's the difference? Why should we put our money more on a Bitcoin treasury company or on an Ethereum treasury company. It's because we think that digital gold is the biggest narrative, or more Wall Street's new backbone.
Tokenization and everything.
Yeah, tokenization. I
Mhm.
mean, what's the point? I mean, as an investor, how should we, see those differences? And actually, we didn't speak already about different digital asset treasury companies like with Sol and other
Yes,
digital assets.
even Doge.
Yeah, even Doge. Yeah.
Yes. But I think
Yeah.
maybe I can quickly answer this question. So in my view, I mean, there are many aspects, but what is better than Bitcoin or what is better than Ethereum? Compound Bitcoin, right? Or compound Ethereum, because treasury companies can use leverage and acquire more Bitcoin slash Ethereum and so on, right? So that's why they're trading at a premium as well. Right? But also other reasons. In case of Ethereum, it's because of staking rewards as well and so on. But why should investors choose treasury companies over direct crypto investors? Some investors can't invest directly, right? We know this for legal reasons. Metaplan is a prime example in Japan. They're actually using this kind of regulatory arbitrage because a direct crypto investment are the tax on these investments is punitive, right? It's like 50% in Japan. While stock investments are taxed, I think, at 20%. Correct me if I'm wrong, but it's significantly lower. So they're actually exploiting this kind of regulatory arbitrage. And some investors, or I'd say most of the investors actually, they have guidelines, right? They can't just change their guideline in a certain multi-asset portfolio because they're mandated to only invest into equity, to only invest into fixed income, not invest into crypto assets. So they have no other choice than buying equities of treasury companies, right?
Yeah, I would just add, I agree these two treasury models are complementary. It appears that the market is not yet pricing into the Ethereum treasury companies the yield that's coming through staking, responsible staking, but also along the risk reward continuum. And that revenue associated with staking activities will be, which should attract a multiple, a forward multiple, because it's a revenue in a public company. The second characteristic that I think is different is Bitcoin, as it's become more institutionalized, has become less volatile as an underlying asset in a treasury. Um, Ether has a higher volatility, which means for those institutional capital market players who are playing a gamma trade or want to do volatile type trades, the ability to do equity linked and converts are actually more attractive in an Ethereum treasury context. A, because the volatility is higher, and if that debt comes with a coupon, 1, 2, 3%, the yield off the Ethereum is almost self-funding that debt, which is less dilutive in the short run. So there are some characteristics. I personally think, I'm not just talking my book, that there is a temporary dislocation in MNAV. And as the markets start appreciating this and these issuers, including Sharplink, start maturing, the ability to use not just equity, but equity linked will be another tool in the arsenal to raise capital and invest it accretively in Ether for that long-term opportunity. So there are a couple of characteristics that I don't think are yet built into the Ethereum treasury pricing. They will over time.
So I want to build on that point, sir. So basically, you mentioned that you are here in the long run, so your strategy is to be there as long as possible. I want to ask, are you afraid of downtrending Ethereum yield? Like the Ethereum yield is trending down constantly over the past period. Will that affect the shareholder value of the Sharplink common shareholders?
Well, I think today, as I said earlier, I don't actually think the market is yet pricing in yields. Many of these companies have not had full 10Q reporting cycles and may not have been as transparent yet about what yields are being earned. I actually think potentially the contrary. And what do I mean by that? When you're able to accumulate large amounts of ETH, we have roughly 3.7 billion in ETH holdings, and we expect that to grow. you have an ability to get above market yields. What do I mean by that? With that much liquidity, you have an ability to choose lending protocols, DeFi, and be liquidity kingmakers to new protocols as long as they're safe and diligenced. And you could probably get outsized returns by bringing large pools of liquidity and even potential token value from the protocols themselves. So I think, we haven't yet seen the benefits of going out to the efficient frontier of staking opportunities when you have large pools of liquidity. And you'll start seeing that over the next months and quarter, not only from Sharplink, but from others in this space. So I'm less worried about yields coming down. I'm more worried about people doing this responsibly and not chasing that last 100 basis points and taking a lot of smart contract or counterparty risk. That's my personal view.
Very, very strong point, sir. Can you say can you elaborate to us, like what's the model that you kind of implemented Sharlink to acquire more ETH? Does it differentiate against your peers in the industry and of course Bitcoin Treasury companies?
Sure. Let me talk about what's common first. And by the way, we are rooting for all the treasury companies to be successful because that means there's capital belief in this long-term Ethereum opportunity. That said, we compete. So what's common? Everyone is raising capital today largely through the equity markets. They take that, it's an accretive investment. They put it into buying Ethereum and they stake it. And you don't yet see publicly how folks are staking. We're trying to differentiate ourselves in three ways. We want to be the most institutional. We've hired teams from both consensus and outside who have decades of experience in institutional asset management so that we're not taking risks that are not providing the right rewards. Second, we are trying to differentiate through our relationship with consensus. Over time, being part of that Ethereum ecosystem will be self-rewarding. You can stake in the ecosystem. You can work on new platforms like Linea and get preferred staking rewards. But most importantly, you can eventually start building operating companies that are Ethereum denominated. So we historically at Sharplink had a gaming affiliate marketing company. But if you can start building businesses that drive ETH denominated revenue, that can be distinguishing. And we're planning not to run this as a fund. We're planning to run this as an Ethereum company.
Okay. Thank you so much for the answer. Now, because we are approaching the mark, let's answer one more question that's regarding risks in next 3 to 12 months. So my question for you, sir, is are you afraid that maybe other altcoin digital asset treasuries will eat from ETH's plate in the next 3 to 12 months? And by that, I'm aiming primarily at Solana digital asset treasury companies.
Is that a question for me?
Yeah, for you.
That sounds like a Joseph question.
Oh,
Yeah.
that's fine. And I'm hearing a little bit of background noise. Look, we believe in an Ethereum opportunity, and let me explain why. If you think about how networks are valued, whether it is Ethereum and the L2s that derive security from it or other L1s, the vast amount of activity to date has come from retail, but the activity in the future is going to come from institutional finance. And I know institutions well. I spent 20 years at BlackRock. We launched the largest tokenized fund in the world on Ethereum. And when we did our due diligence, institutions care about many things, but primarily two. They care about security and they care about liquidity. And Ethereum has been up for 10 years without outages. Other networks have beautiful websites that talk about, their uptime and downtime and the like. And second is liquidity. Ethereum and the L2s have about 10 times as much transactions being secured as Solana and the rest. And by transactions, I mean stablecoin usage over 60% on Ethereum, real world tokenization over 80% on Ethereum. And when you think about DeFi, and when I say DeFi, I mean high quality liquid assets, borrowing, lending, exchange, over 80% is happening on Ethereum. And while I think meme coins and NFTs are really interesting, those are not the networks that institutions are looking to tokenize on. So I'm not knocking other L2s. I just think historically Ethereum drives liquidity and security, and that's where the assets in the long run, the high quality sticky assets, will navigate.
Yep.
Oh, nice.
Yeah, just so yeah, we have many good questions from the audience. Just want to pick one of them from John, actually, and it's for Joseph and André. As you know, I mean, because more people will stake, the rewards, I mean, will be lower. How do you manage this in the long run? And I mean, in terms of investment, André, and also Joseph as a treasury, I mean, Ethereum treasury company.
You mean like Bitcoin and Ethereum
Yep,
rewards?
yep, especially yeah, for Ethereum, but also for yeah.
The staking rewards, you mean?
Yep,
Yes, I think that the staking rewards, they've been trending down, right? I think the staking rate, the staking yields right now is around 3% for Ethereum. But as you're right, it has trended down, and as more validators come online, will continue to do so, right? But I think even if you have like 100% staking rate, right? So you have 100% of validators, and there's no other activity, which is it's probably not a scenario that will happen. But even in that crazy scenario, you have a 1.8 staking yield. So it won't converge to 0, it will converge to 1.8. That's like the long-term convergence. So it will still earn a yield, right, on Ethereum. But it will, of course, be significantly lower than today. But I mean, you can also earn a yield on Bitcoin, but it's not a native yield
yeah.
based on the protocol. You can earn a yield by options trading, for instance, right? But that's probably a different story.
And you, Joseph, as the
Yeah.
co-CEO.
Yeah, I think if you take a step back, our goal is to give investors a smarter way to get access to ETH. You can buy spot. It's hard for most institutional investors. You can buy an ETF. ETFs don't yet in the US have staking permission. And when they do, and they should get from the SEC soon, they're likely only going to be able to stake half of their ETH just because of a need to stay liquid for any redemptions. And so our primary objective is to accumulate ETH for long-term capital appreciation. We're not built as a dividend company. We're built to accumulate as much as we can at the lowest price. And you could think of you can think of the yield as being a bonus. But if you believe that long-term opportunity, if you believe ETH has much higher prices ahead, accumulate as much as you can right now. And the primary benefit is going to be the capital appreciation, even if staking rates vary over time, including varying down. So it's an Ethereum treasury company, which means capital appreciation. And we'll watch the network and yields and just be responsible about it. I think the biggest mistake one could make is to chase yields and end up taking risk. And if you're a treasurer, your number one job is to preserve the treasury, not to take outlandish risks to get another 100 basis points of yield. So we're going to do it in a risk managed way. And in the long run, the capital appreciation will be the primary means of investor value.
Yeah. Thank you so much for your answer once again. I have a very very interesting question from Tim. He says that given that Bitcoin related domain names are being sold at the premium prices, where's the question? At premium prices, and some pension funds are beginning to allocate portions of their portfolios to Bitcoin. Does this indicate growing institutional and mainstream confidence in Bitcoin as both a digital asset and a long-term investment vehicle? I think, Andrei, this is a perfect question for you.
Yes, I think eventually all kinds of investors will invest, right? Pension funds, we've seen Harvard invest after, I think, how many years? 7 years after they said it's more likely that Bitcoin will go to 100 than to 100,000, right? But they also invested, right? We've seen the executive order by the US government to allow Bitcoin, other crypto assets in 401k plans and other defined contribution plans. So it will happen, right? you've seen I think the executive order has actually opened this kind of floodgate of capital that will flow to the whole ecosystem, right?
Yeah. Okay. So I have a question here from Edgar. It's for Joseph. So let me just find it very quickly. So yeah, what makes Sharplink, for example, a better investment than Tom Lee's Bitmine? A lot of digital asset treasuries are currently entering the market. Is there a risk of companies, digital asset treasuries, actually cannibalizing each other in the seek of liquidity?
Sure. I believe in this idea of co-opetition, that you could
Hmm.
cooperate and compete at the same time. I think if we were the only digital treasury company, we were the only one who had this lonely thesis, I think that is a worse place. So I actually admire Tom Lee. He's been a great advocate. I think we're trying to differentiate ourselves in two ways. One is our relationship with consensus. We have Joe Lubin, the co-founder of Ethereum and the CEO of Consensus, the most experienced Ethereum company, as a chairman of our board and as an investor. And two is we are building out a team of people who are expert, who are going to do this in the most institutional way. And then finally, our goal is to not just be, accumulating ETH, but to actually participate in the ecosystem, both through um, making protocols on Ethereum, including Linea, more successful. And second is by building Ethereum-based operating companies. So we hope the entire industry is successful. The final stat I'll share with you is in order to raise capital in this space in public companies, you need liquidity in your market. And I think Bitminer and Sharplink collectively to date have over 95% of the stock liquidity. And so I think over time, there'll be a consolidation of winners, but we're rooting for the entire industry because we believe in this long-term opportunity. And I welcome the competition. These are great competitors.
Thank you for the answer. So yes, I believe we don't have any more questions. So gentlemen, once again, thank you so much for this conversation. I enjoyed it a lot, and I hope our audience did too, and they learned something regarding Ethereum digital asset treasuries as well as macro. Of course, I just want to remind everyone that Market Call is a monthly show, so it will be October episode as well. And thanks to Bitwise once again for sponsoring this episode. So that will be it. Everyone, take care and see you in October.
Thank you so
Yeah.
much. Have a
Bye.
great
Thank
Thank
you
you.
for
Bye-bye.
having us.
Thank
Thank
you
Yeah,
very
you.
much.
you're
Bye.
welcome. Thank you. Bye.